In today's video, we're going to look at key news stories. As Central Bank Week and Inflation Week is upon us, there's a lot to know. I'll also be sharing trades that were made from the smart money buy and sell levels from the monthly service. There's also a secret that professionals know that retail doesn't. I'll share that one with you as well. It can be a game changer. Let's run the numbers. As we discussed in yesterday's video, this week is Central Bank Week and Inflation Week. The surge in oil prices is causing a great degree of headaches globally. Currently, the DXY is not showing strength, it's actually showing weakness. Zooming in, members of the CTKS method monthly service know exactly why. There's so many structural sell areas above the current price. The weight of sellers is pushing the DXY down. Inflationary pressures are being pushed higher. Increased energy prices make their way into the CPI. We'll see in the next FOMC meeting if the box plot indicates that rates will stay higher for longer. The Fed is remaining very data-driven at the moment. Wage inflation is moderating. The CPI is looking healthier. The probability of a 25 basis point increase in the federal funds rate is just 1%. That means that the market has priced in that the Fed won't be increasing the rate for this meeting. However, future economic projections could be a little bit different and they could unsettle the markets. Expect volatility around this time. Surging oil prices are just giving Increasing oil prices are giving economies all around the world a big headache. Except of course for the oil-producing nations. Following the projections inside the CTKS method monthly service for US oil, we've been noticing that higher price path has been followed. Structural support and resistance levels are very different from retail levels, and here US oil has been marked up since 1861, according to Level 1 and Level 2 standard certification. What we see, the current oil price is $92.33. There are multiple levels of smart money support below the current price. There's a fresh air gap, which means the next structural resistance inside US oil's market structure is $93.89. China's economy recently has suffered greatly. If the Chinese economy was stronger, oil prices would be going through the roof. China, in an effort to attract foreign capital, is seeking to make investing in China easier for large corporations. The technology sector has been supporting the main economy, especially the AI trade. That's dominated by the top tech companies. If rates are higher for longer, this could cause problems within the stock market. The US 2-year yield, which indicates the price of money, in the short term had an incredible rally up and then was crushed down. We saw a similar spike in the US 10-year yield as well. With the yields coming down, the DXY losing support. If this is sustained, it could lead to a rallying of commodities, stocks and crypto. Looking at junk bonds can give you a very good indication as to the risk-on, risk-off activity inside the market. We can see that junk bonds are following a consolidation case at the moment. The good news, it's not negative. When junk bonds go positive, generally the main markets rally and crypto rallies as well. The service is all about the practical application month on month of masterclass methodologies, specifically through those smart money buy and sell levels on these 27 charts. When you know where smart money is buying and selling, it takes all the stress out of placing trades and investments into the market. In this video, I'm going to show you some trades that were done on Bitcoin Cash, and I'm going to throw a few Litecoin trades in there as well. Synchronization is so critical inside financial markets. In the lead up to the FOMC, typically what we see is a rally followed by a downward cycle in price. We can see here that the S&P 500 is following a consolidation case and not a negative case at the moment, and that's indicated and confirmed through junk bonds. We can see a similar kind of behavior with the Nasdaq. The point of three-dimensional risk management is that by drawing out these curves, and these curves are explained inside the service and covered off on 27 charts. When you look at this chart, you know the Nasdaq has a slight negative bias and a consolidation perspective, but it's not positive. You are always paid for your synchronization inside financial markets, no matter what you're trading or investing in. We often see an FOMC pre-pump before a dump leading into the actual meeting. The key thing to understand here, in order to make profit, you need to buy when it's low or red and need to sell when it's green. And this is very difficult for people to do. People are much more comfortable buying green, and then what happens? They tend to get trapped. When the price goes against them, they often tend to sell. So they end up buying on green and selling on red, which is a surefire way to decimate your portfolio over time. That's why we have Rule 621, buy on red, sell on green. And there's Borsog, the price eagle, screeching in the background. Buy on red, buy the fear, sell the greed. It's very difficult to do, but when you train yourself, you'll find it's incredibly profitable. The trades that I'm about to show you are based on the CTKS method service, specifically the smart money buy and sell levels, and I'm very proud of Steve. Steve said, based on your CTKS method service, I found good support just below the current price of Bitcoin Cash. I just got a sell notification as I was leaving for work this morning and recycled my earnings right back in with some cycle trading. Cycle trading is taught inside the masterclass. Well done, Steve, and this was from yesterday's video. Unfortunately, what passes for financial education inside financial markets is mainly retail education. That is fear-based education and greed-based education. Both types of education will leave you without your account balance. Retail is taught to chase big percentages, but they're not told what big percentages they actually should chase. They should chase big annualized return on investments. Big annualized ROIs are the way to go. That means you could get a small return on investment if you buy and sell something within a certain period of time. But the annualized return on investment is the key here. For example, this Bitcoin Cash trade for $1,000, you can see that 999.7887. That was the invested amount. The returned amount, 1027.5986, 1027.5986. This was a 2.78% return, but because it was done in 24 hours, it wasn't 2.78% for the year. It was not an annual percent yield or an APY. It was actually the annualized return on investment was 2,249,245%. Retail traders and investors are always told to maximize their return on investment, but they're maximizing the wrong one. They need to be maximizing the annualized return on investment, this number down here. And what does an annualized ROI of 2.25 million% actually translate into? If you took that $1,000 and you managed to get this annualized return on investment, this annualized return on investment means that you could grow $1,000 into $22.488 million in the span of 12 months. I'll give you another example of a Bitcoin Cash trade that took about 6 hours. Here we can see I bought $1,000 worth of Bitcoin Cash and sold it for $10.23, making a 2.36% profit. You'll notice that the annualized return on investment is a lot lower than the other example. It's still pretty good. It's 492,000%. But the concept is you want an annualized return on investment greater than 50% or greater than 100%. The higher is the better. And I'm going to take you through a variety of different trades here so that you can learn about the annualized ROI and what it means. When looking at these trades, the important thing to understand, any annualized return on investment greater than 50% or greater than 100% is fantastic. Don't be at all concerned with getting millions of annualized return on investment percents. It's not important. One thing that Steve said in his comment on yesterday's video, you can take the same amount of money, and this is another trade done on Bitcoin Cash in the 2-hour time frame. What we can see, we can take a certain amount of money, just turn a certain percent, roll it back and turn the same percent again and again and again. That means if you were to get 2% on $1,000 and to do that 5 times, you don't get 2%, you get 10%. This is the absolute magic when it comes to cycling and recycling your money inside trades. The reason I'm showing you a different variety of trades is because I want to help you to understand what percentage you can aim at. And by creating different examples for you to look at, and all of these examples are from the structure of Bitcoin Cash, from the service. If I didn't have those structural buy or sell levels, I couldn't make these trades. You can see that these percentages in terms of ROI are very conservative, but I knew pre the FOMC we tend to get a rally and then a dump. Sometimes you'll find that just to get a small return on investment is more than good enough. And here we look at a Bitcoin Cash trade for 1 day and 9 hours. Notice that this one is a slightly larger percent, 4%, and look at the impact on the ROI. Even though it took over a couple of days to get, this shows you that when you have an annualized return on investment that is very high, you can actually leave your money in for longer. There's no need to just get it in, get it out, get it in, get it out. You can do so many different things. I'll continue to share trades that show you the particular structure of different charts. But the concept is, I knew what I was doing and I wanted to show a variety of different examples for you to help your understanding grow. A very big thank you to Perperatum, who commented in yesterday's video. I use the gold SLs from the CTKS Method service every day at work. They have become 100% indispensable for me. Thank you, my friend. And Perperatum has very kindly offered a CTKS partial masterclass scholarship. You can apply for that in the link of the description of this video. There are 27 charts within the service, and every single chart has these SLs, these structural buy and sell levels. You can pick which ones you buy at and which ones you sell at, and that's wholly dependent on your risk profile. Let's have a look at a Litecoin example. This particular Litecoin example was done yesterday. In the span of 6.5 hours, 1,000 became a 2.14% return. Retail thinking would say this return on investment and this annualized return on investment is just far too low. But let's think about this for a moment. If we invested 1,000 and had this annualized return on investment, what would that 1,000 grow to at the end of 12 months? The answer is $2.3 million. It's not too shabby. I'd like to give you another trade on Litecoin. This particular one took 2 days and 22 hours. You can see the return on investment for this specific trade, not the annualized ROI, but the ROI is about 6.56%. You'll also notice the annualized return on investment is nearly 11 million%. This means that you can do very well by leaving money in to chase a higher ROI that pumps up your annualized return on investment. This is very appealing for a lot of people, but there's a trick to this. In order to get these big percentages, you must buy when it's red and you must know what you're doing. I often say get on the right side of the percentage, and I'll show you exactly what that means in a moment. I thought you might find it a little bit more interesting if I popped a little bit more in. Here's a $5,000 trade on Litecoin, and you can see in approximately nearly 2 days, the returned amount was $5,125, a 2.51% return, and annualized ROI. That was quite nice as well. The key is it's not about the money, it's about the annualized return on investment. All of these trades were done with a knowledge of the structural sell levels and structural buy levels from the CTKS method service. The concept here, I use the specific levels marked up with the CTKS method on Bitcoin Cash, this one here, and Litecoin, this one here. And you can see, you can literally print money, but you need to know what you're doing. Smart money buy and sell levels are emotional by nature. If you can get in when it's red, if you can buy on red and sell on green, borsog, you're ahead of 95% of people who run on red and buy on green and therefore get slaughtered financially. Let's have a look at ADA Cardano. We'll just pop on the CTKS method indicator. You can see the structural sell areas and structural buy areas inside the chart, and the video for ADA explains how you can overlay this indicator. I mentioned getting on the right side of the percentage. When you understand where smart money is buying and smart money is selling, you can use this to inform your decisions on entry and exit points. The first thing to realize that price is always rebounding SL to SL. Sometimes we get a thing called negative air, or sometimes we get a thing called positive air. Those air gaps are the sellers or the buyers coming in to make sure the price doesn't get up to an SL. But what we see all the time is strong SLs or strong Stanfield levels. They really help to support price. This gives you a certainty like what Steve was talking about and Perperatum was also chatting about. And if you have similar stories, please let me know in the comments. The concept is always, if you buy around a safety net and sell upwards towards a ceiling, that's the way to go. But you don't necessarily have to sell at the specific lines. That's a good way to do it if you're just starting off. You can choose if you've seen, for example, that the price has not managed to come up, and you can see that the price was reasonably rejected here. You could just put your sell level a little bit below these structural sell areas, because that at the moment is a good idea for ADA. The sellers are in control. There's so few people in ADA that are actually profitable at this current time, but you can see the smart money buy areas are holding. Now, how do you get on the right side of the percentage? Well, you actually buy on red around structural levels, especially if a particular chart is weak. And then you can go for a targeted return on investment. Say you bought at this structural level or this structural level, or say you spread your money across both so you could buy at either of them or both of them. And then you set whatever percentage you want to set. That is the way to go. But notice this, if you buy at this particular 2460, which is a very strong structural buy level in ADA, and you look at the potential return on investment, which is around 4.06%, just say you go up to the one above that, which is around that 2468 mark, you can see it's dropped to 3.75%. Say you needed the price to go and clear this area, and then you decided, oh, I'll buy here. Now you're down to 2%. Or if you were like most retail, they would start to buy near the top. You can see how the percentage return on investment is just dropping, and that will drop your annualized return on investment as well. You can see when you buy on red around structural support levels, it is a very, very good thing to do, because you can recycle your funds and you can just aim for a targeted return on investment. You don't need to pin the top and you don't need to pin the bottom. That's what retail tries to do, and they always fail because no one can do it realistically. Instead, you aim for the sweet spot, you aim for structure. Remember, you can't get on the right side of the percentage if you're not buying on red, but you must know what you're doing. That is what the masterclass is for. The service is the practical application month on month of the masterclass. The masterclass is the knowledge transfer from more than 30 years about how financial markets work, how to place trades, how to control your mindset, how to read cross correlations between charts, and so much more. It takes hundreds and hundreds of hours to mark up charts, to do the 27 videos, to do the 27 three-dimensional risk management curves for each of the Tier 1, Tier 2 and Tier 3 charts. That's why the service is a separate thing to the masterclass. It literally saves you hundreds of hours every month, and it gives you an insight into the markets you couldn't get anywhere else. The foundation membership for the service is closing very shortly. If you're already a member of the service, prices will not increase for you. But as prices rise, you will not be able to get the foundation membership if you let your current membership lapse. I've just shown you trades on Bitcoin Cash and Litecoin, tried to share a bit of an insight on how to get into the right side of the percentage, how to borsog, how to use the service levels to do so, especially how to focus on the right percentage, which is the annualized ROI. When you are synchronized in with the market, you will make profits. If we look at Bitcoin Cash right now, it's up 2.77%, but so many trades were done on Bitcoin Cash, each netting in excess of 2%. These percentages, especially if you're doing cycle trading, roll on top of each other to create incredible returns. Always remember, in order to get 2.77% increase today, right now, you would have had to have been in Bitcoin Cash yesterday when it was 2.77% below this price. That means without buying on red, you cannot sell on green. Many people, if they were just trading Bitcoin Cash and Litecoin, would just look at Bitcoin Cash and Litecoin. We don't do that. We make sure that we're looking at least total crypto cap and Bitcoin, as well as the Nasdaq, the 2-year, the 10-year, the DXY, the Forex pairs. Why is this important? I'll show you why. When we throw on the indicator, just see what happens around here. In fact, I'll zoom in. And before I do that, I just wanted to thank Art for his very kind comment. Thank you, my friend. Zooming in to price action, and we saw that Bitcoin Cash and Litecoin and Bitcoin were just rallying up and up and up in the last video. Since that, they've come down. But why? Why did they come down? Because of all this structural resistance inside total crypto market cap. It's very important to look at this and also to look at Bitcoin. This meant that the sellers were getting in more and more control and were likely to push Bitcoin, crypto, and everything down. And that's exactly what they did. This means be careful of your risk when you're coming into a lot of overhead sell structural resistance levels. It doesn't matter what you're looking at, the same rule applies to every chart. Heavy sell areas, the sellers will gain control. What was happening to Bitcoin around that period of time? Let's pop on the monthly indicator. And what we can see, when I say the monthly indicator, it is indeed monthly. Level 1 and Level 2 standard certification mean that all lines need to be redrawn each and every month. That's why the service was created, to save people just countless hours of time and make it so simple to apply the CTKS method. What we can see, when Bitcoin was rallying, it bypassed level after level after level after level of smart money sell resistance. We must look at total in conjunction with Bitcoin. The two will reinforce signals on each other. We can see that when we fail to hold this smart money buy area at 27,231, it dropped down below so many different safety nets And that was a bit of a problem to Bitcoin, and it's currently rejected this 26,894 level. That will mean that we're heading towards this lower structural buy area, 26,565. If we manage to get above this 26,894 level, that's really good and very constructive. But this really big sell down here illustrates there's weakness inside market structure. Perperatum and Steve mentioned that they use the SLs from the servers. If you're using the SLs, please let me know how they've helped you. As a global family, we're always seeking to raise each other up. If you have any tricks or tips that could help other people, please let me know in the comments. Or you would just like to share how the CTKS method had helped you, that would be wonderful. Having the right mindset is incredibly important. That's why we adopt a philosophy of positive excellence. Positive excellence means we win or learn and never blame. If a trade goes against us, we say, doesn't matter. What did I learn from that? And did the trade really go against you? Often when people sell, they're selling around the bottom. If they just held on to it for longer, they would witness things turning around. This isn't always the case, but it is generally in the short term. Learning is a critical thing to do inside financial markets, learning to stack probabilities, learning to understand how the Tier 1, Tier 2 and Tier 3 charts all intercorrelate and interconnect. Because I knew about the FOMC meeting, I believed that there was a strong probability that crypto would rally. And that was a bit of a tough one because even the main markets were coming down as crypto was going up. But we always follow price reality, just knowing that to stack probabilities is the key. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.